Are we in an economic golden age? And if we are, why do Americans say they feel like it's more of a bronze age? The economic numbers look good if you listen to government statistics, but Americans don't seem to feel it. So, what is going on in the American economy?
From the opinion pages of the Wall Street Journal, this is Potomac Watch.
That's our subject today on Potomac Watch. I'm Paul Gigot here on the daily podcast of Wall Street Journal Opinion, and I'm here with two of my colleagues who are economy watchers, Joe Sternberg and Alicia Finley. So there was some good statistical news on Wednesday. Delayed jobs report for the month of January, delayed due to the backup at the agency because of the autumn government shutdown, but it showed that January job growth was much better than economists had expected. 130,000 net new jobs in the month. Even better, 72,000 or so in the private economy, thanks to a 42,000 job reduction in government hiring. That's how you get to 130. Let's listen to Kevin Hassett, the White House economic czar, talk about the results.
And we just saw one of the best jobs reports you've ever seen, outperforming the estimates of 76 out of 78 economists polled by Bloomberg, giving us, let's go through it, the best labor force participation that we've had since 2001, the lowest share of federal government employees that are working since 1966. Everything is hitting on all cylinders, and the deficit is going down because of the tariffs. And so people who were naysayers about the tariffs said that we'd have low growth and high inflation. Instead, we have low inflation and high growth, great job creation.
Well, Kevin Hassett puts the golden shine on that one. I'll tell you, Alicia. What do you make of? First of all, before we get to the tariffs, let's talk about the jobs report. How do you feel about it? Good?
Well, I'm a little less sanguine about it. If you look and drill down into numbers, you'll find that the economy created only about 181,000 jobs of all last year after the revisions, and about 770,000 on net were in social assistance and healthcare, which are industries that are really funded and financed mostly by the government. That means that a lot of other industries all last year, manufacturing, transportation, warehousing, were losing jobs.
Okay, I want to get to that last year, but what about the January numbers? That sort of suggests a rebound.
It does, or may. I think you always have to take this with a little bit of a grain of salt, because the monthly numbers have been very noisy lately and subject to big downward revisions over the last year. And there are a number of reasons for that. They're birth to death models, the smaller businesses who have been hiring less are later to respond to the surveys, resulting in some kind of the earlier numbers coming in bigger and being down or revised downward later. I think it's good news that most of the jobs, on one hand, in this last month were in the private sector. The federal government actually shed jobs. However, still about 75% of the new jobs in January were still in healthcare and social assistance. So you really don't see broad-based job growth. Construction added about 30,000 jobs, but outside of that, most industries didn't.
That's the big issue, Joe, for me, in terms of heralding this as a super rebound in the jobs market, because it's just not that broadly based. Manufacturing in particular added only 5,000 jobs after losing a lot of jobs last year. And just to get to Alicia's point about the revisions, which is an annual process. Okay, this is not something special. They do it every year, the Bureau of Labor Statistics. But it did show that with the revisions, the gains in the jobs for all of 2025 were only about 15,000 on average a month, which is really strange for an economy that was growing at a faster rate, particularly in the last 3 quarters of the year, at a faster rate than 2%. So, how do you explain it?
Well, I think a couple of things are really sticking out about this. One is, I mean, we have to talk about an issue like the manufacturing jobs, where the story for most of 2025 was declines. And then even now that it does seem to be perking up a little bit in January, it's very gradual. I think that that's a really significant red flag for the Trump administration, because that's the lever they are trying to push on the hardest with policies like the tariffs and various other deals that the administration is doing with this company or that company to try to encourage the construction of new factories and that sort of thing. So I think that there is a warning here that what the administration is trying to do to push on that particular kind of employment in the economy is not working. And I think that more broadly, one way that you can interpret this is, I mean, look, we all know hiring a new employee is a big commitment for a company. It's a big line in the budget. I think that a lot of managers feel a certain obligation to the people that they are hiring to think that, to hope that you will be able to sustain that job for a reasonable period of time if you're asking someone to commit to working for you.
I sure do.
And I think that it, is telling a story about the economy that even though a bunch of these headline numbers are really good, employers do seem to be hanging back from making that kind of commitment to the economic growth story over the next 6 months, year, 18 months even. So I think that, job is better than no job, and I'm not going to gainsay, any kind of progress to increase any kind of job in the economy, with the exception of government employment, which we don't need any more of. But I think that there are some things that the Trump administration has to be very careful about, particularly in a midterm election year.
A couple of points here on government jobs. The report of the Labor Department said that from a peak in October 2024 in government employment, federal government employment is down 327,000 jobs, or almost 11% of all the federal employment. That I think it sounds, if you like government jobs, bad, but for the rest of us who pay for those jobs, that's good, because the Biden administration had boom times for government. The government employment soared. So this was a necessary correction in my view. But Alicia, I want to get your point, your analysis of the essentially the job stall before January, because it's really an extraordinary fact that the economy created so few jobs on average and on net during the year. Now, there are a lot of theories out there. One is the uncertainty from tariffs put business on the back foot and decided, okay, we're not going to fire a lot of people, but we're also going to hire a lot of people. Then there's the AI, artificial intelligence investment productivity story, which is that you don't need to hire people if AI is doing a lot of those jobs. Now, that doesn't seem as persuasive to me yet, because even though I think there will be an AI productivity boost coming, I'm not sure that it's permeated enough of the economy yet to be able to do that. What other kind of explanation do you have for why employers haven't been hiring?
I think you put your finger on it, which is that there's a lot of uncertainty, and that comes from various directions and policies, especially the tariffs as it relates at least to the manufacturing sector and other goods. If you read For My Sins, I've skimmed through the Fed Beige Book, which is a survey of businesses about what they're experiencing on the ground. And you see the word uncertainty crop up a lot. And that's, again, it's because of the tariffs. It's also because of the immigration crackdown, which is limiting, at least making it harder for employers in certain sectors, especially construction and in some places, leisure and hospitality, to hire. Another thing that a lot of businesses interestingly mention is state level policies. And if you actually go back several years, you can see that growth has been really slow and probably and actually negative in some states like Illinois. And actually, California has lost jobs over last year. And that is in some ways a reflection of these state policies that make it harder or more expensive to hire. Some businesses in Minnesota actually noted that their new paid leave requirement and taxes actually increased their cost of hiring and resulted in less hiring in Minnesota. So I think those are also contributing. But I think there's just broadly uncertainty of where the economy is headed. You don't want to hire people when you're not really confident in your own business and that you're going to be expanding. You saw an increase in temp workers this last month, which actually also echoes what some businesses were saying in the Fed Beige book, is that they're hiring people temporarily because they don't want to commit to hiring people long term because they're not certain about the direction of the economy.
Yeah, that's interesting. But January, we can hope that there was a little bit of a comeback here. One interesting data point in the survey is that the number of people who were employed part-time for economic reasons, that's because they said the economy wasn't good enough to be hired, it fell by 453,000 to 4.9 million. So that's a sign that some people are being drawn into the workforce. And that gets to Kevin Hassett's point about the bump up in labor participation, which is, of course, what we all want to see. But that brings us, Joe, to this disconnect between what you could call the numbers, at least until Thursday. The stock market fell below 50,000, the Dow Jones average, but it had popped up above 50,000, a new record. The GDP, that is the gross domestic product figures for the overall economy, seem to be healthy. The fourth quarter should be above 3% when it rolls in. And then now you have this jobs number. So macro numbers, not bad, but the feeling that voters have about the economy, every survey of sentiment comes in as they just don't think it's all that good, and they don't think their particular circumstances are good, are rising, and that really has political impact here in the midterm elections, or could have political impact in the election. What do you make of that disconnect?
Well, Paul, part of this is related to one factor that you didn't mention in there, which is inflation, which continues to be well above the 2% target that everyone is thinking about as a sign that inflation has been conquered. So I think that for as long as that is the case, you'll have a lot of economists, particularly in the Trump administration, talking about how the rate of inflation is much slower than it was under the Biden administration, which is true. But remember, any time that inflation rate is positive, prices are still going up. So I think that is going to create some political issues. And that, there's an argument that inflation, even more than the labor market situation, colors voters' perceptions of the state of the economy, because even when you have unemployment spiking, most people will still have jobs. Everyone has to buy groceries and gas. So, every voter is exposed to prices in a way that not every voter ends up being exposed to unemployment at any given time. I think that more broadly, what you're seeing is the macro data, whether that's data about the stock market, which is a reflection of investors' overall expectations about future profits and productivity growth, or macroeconomic level GDP data or the rest of it, that can tell a story that can be skewed by parts of the economy that are performing very well right now. So, we do have a phenomenal investment in artificial intelligence, especially, and a lot of that probably will end up paying off in one form or another in terms of long-term economic growth and prosperity and productivity gains as that technology really starts to settle into the economy. But that can conceal other parts of the economy that aren't performing as well that voters might notice more. So, for example, this can all coexist with a manufacturing part of the economy that is really struggling to find its feet because of the tariffs, because of various other policy factors that are in play. Voters will notice that to the extent that they might work in those industries, people who do. And so I think that one of the political lessons here is that if you want to win elections, the goal has got to be as diversified an economy as possible, because you have to create as many opportunities as possible for as many different kinds of households and voters as possible in order for you to get any kind of credit for it at the ballot box.
The conversation we're having is on a Thursday, a day after the job market report, and the inflation report for the latest month is expected tomorrow. That could tell us a lot about the pricing numbers and just how voters will feel if it if it stays high. It's at about 3% now, which is above the Fed's target. And 3%, said it sounds like it's not that high. But when you come down from a peak under Biden of 9.1, it's a big disinflation jump. But it hasn't really moved below 3 for some time. It's kind of stuck there. And I think that means that prices are still affecting people, particularly because they're still adjusting to the shock of the Biden inflation. And gasoline prices are down thanks to, in part, I think it's fair to say, Trump's promotion of across-the-board energy agenda. The prices in goods from the tariffs and certain goods still haven't flowed through entirely through the system. Regarding tariffs, before we end, Alicia, I just want to ask you a question about what happened in the House of Representatives Wednesday, where the House voted 219 to 211 to repeal the president's emergency tariffs on Canada. 6 Republicans defected, despite the efforts of the Speaker of the House to try to prevent a vote. He couldn't, and this is kind of a big shock to the president, who said Truth Social before the vote, any Republican in the House or the Senate that votes against tariffs will seriously suffer the consequences come election time, and that includes primaries. So he was threatening members who voted for the repeal of those tariffs with potential primary campaigns. But it didn't work in the cases of 6. A couple of them are not running for re-election. But what do you make of this vote? He kept most Republicans, the president did, but this means that given the vote on a similar bill in the Senate, that the president may have to veto something, that a resolution that goes to his desk repealing the tariffs.
I think that's right. I mean, in some ways, this is symbolic because he will end up vetoing the resolution. But it does show that there's growing discontent among some Republicans about his tariff policy. And that's in part because they aren't particularly popular. If you look at the polls, voters overall want to decrease the tariffs by a margin of 3-1. And independents particularly do not like tariffs, and they can connect the dots. They see that tariffs are increasing costs, at least at the margins. That's what tariffs do. They are border taxes. And so I think these Republicans are trying to at least protect themselves by coming out, at least voting for this resolution that would terminate tariffs, or terminate the president's national emergency declaration that underpins his tariffs for Canada in particular. Now, it doesn't apply to his other emergency tariffs on Mexico and the rest of the world, but at least they want to show that they are opposed to this. This kind of willy-nilly slapping allies with tariffs. And so I think that this may be may breed to more revolts, at least at the margins. You may see more Republicans start to come out and at least criticize them. But I think the broader problem is that you can't really force the president to rescind the tariffs because they don't have a 2/3 majority to override his veto.
Yeah, I think that's right. I mean, politically, this is not going to be repealed by Congress. The Supreme Court will have a say when it rules on his emergency tariffs coming up here any day now. We hope, and we'll get a ruling on that, and that could upend the president's emergency tariffs. He has other authorities that are, in fact, legal because they've been handed down by Congress. The emergency tariffs are in jeopardy because the lawsuits say he does not have that authority, and we'll see where they come down. But I think that the tariffs are hanging over the economy until we get to some kind of a settlement here. And the White House doesn't want to admit it, but I think they are causing some uncertainty, and they have raised costs. So there is an economic cost for the president before we get to this golden age, if it ever arrives. All right, I'm going to leave it there for today. Thank you all for listening. Thanks, Alicia. Thanks, Joe. We're here every day on Potomac Watch.